The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, welcome back here, I guess, to myself, and we'll see how the show goes today. If you have any questions, it's 877-927-6648. And I really wanted to come back today to discuss where we are in the market. The first chart that I've posted in, you've seen, this type of chart before, but this is this 5-wave expanding triangle that we're seeing in the New York. This is the cash S&P index, and we have completed that. And now we've had the first correction down. We've had the rally back to the 61% retracement, and now we are looking at a really interesting spot, because if we go below the lows that we made on Friday, it would have been Sunday, the 17th of March. It happened on a Sunday night in trading, which would have shown up as your charts on the 17th. But if we go below that low, which is 1821 in the S&P index, the futures, that tells me that the cycle low from February 3rd was also broken, and that one came in at 1843, and we'll be looking at something incredibly bearish if that were to happen. Now, we've had this occurrence occur already in one of the key things that we've followed through the years here, months, I guess, not years, but it's called the biotech index, and we have gone to touch the February low already today. We're down, quite a bit, but this is it's just touched that major support again. So this is at a critical level. If this were the case, the S&P would be trading at 1821, not at 1846. So the key level to watch. And believe me, this biotech index is rather small compared to anything else. But the fact that this led the market up and has come off so much, makes you wonder if, in fact, it is going to be a more severe correction. But this is the first time we've had these really big drops in the biotech index in a long time. And remember, some of these stocks don't even have sales. Let alone earnings. They just don't even have sales, which is very similar to what happened during 1999 and 2000 with many of those internet stocks, and they didn't have anything either, and you know what happened to them. But it's different this time, I'm sure. So this is what we're watching, though. If we get below, we bounced a little bit, 7 points off the bottom today so far in the biotech index, but I don't think it means a great deal. We've hit major support today in the S&P. We made the 61% retracement of the low from March 17th. To the high we made after that, and then we've come down and tested that 61% retracement. So the market is still in a bullish mode as far as I can see, but I just want to warn you that if we go below those March 17th or February 3rd lows, we are looking at something incredibly bearish, because it would do it very, very quickly, and then you would be looking at a cascading market to the downside. This would be a similar situation like what we had in 1987. Whether it's going to be the same or not, I don't know, but we topped on August the 25th, 1987. We came down into September 3rd. We rallied up into October 4th, and from October 4th to October 19th, the market gave back 40% of all of its gains from 1982. So we don't want that to happen again, but there's a possibility of it. So just remember, if we go below those February 3rd lows, that would really be a sign that something really dramatic is getting ready to happen in these markets. I don't believe it has anything to do with what's going on in Eastern Europe and stuff like that. That stuff happens all the time. They pass these things on like it means nothing. But we'll wait and see how the news reacts to it. But the real key thing is to watch those lows of February the 4th and March the 17th. by the way, most of you don't remember this, but this was the day that the Nasdaq topped in 2000. It was March the 24th. I believe it was a Friday. It might have been a little bit higher on a Monday. I'm not sure, but it was on the 24th of March, and then the market gave back 85% of all the gains that it made from 1996 through 2000. It gave back 85% and stayed there for quite a while, and then made a little bit lower low, later in 2003, following the 9/11, tragedy. So just keep in mind, folks, I do a lot of cycle work. Some of it works, some of it doesn't. But this is something that we're watching with a great deal of interest, because it's at the spot where it must hold these levels, and it will give us a place to, really watch it for, potential for a much, much larger move. So just keep in mind that's what we're having in mind. Now, we're going to focus on one stock in particular right now, and that because the patterns are just so incredible here with J.P. Morgan. This is a stock that we're going to be looking at that goes back, well, I'm going to just do it over the last 5 months, because that's where you can blow up and see the pattern forming, the clearest. And that is we have the 1, 2, 3, 4, 5 expanding triangle completing up around $61 a share. We have a butterfly pattern completing at $61 a share. We have an ABCD pattern completing at $61 a share. We have a 3D pattern completing at a three drive to a top pattern completing at $61 a share. So those are the ones that we're looking at. This is a very interesting pattern that should be completing here in J.P. Morgan. So we'll see. We got our first caller on the line, William from Singapore. Are you there, William?
Hi, Mr. Pesavento. So happy to have you back, in TFNN.
Well, thank you. What can I do for you, my friend?
Yes. I'd like to ask you regarding Tesla. Today, I think, since that is moving downwards pretty fast, I was actually, using the ABCD patterns. It looks like, the CD is more than the AB, it's almost reached the 1.618 of AB. Do you think that, at this point in time, we might see bottom reach for, Tesla?
Well, William, we've had a tremendous run in here. Well, let's just take a look at this. We filled the gap that we had down at the 220 level. We've got another gap. Well, there's gaps all over the place, but the first thing I would do is I would look for the 382 retracement from the low we made in November, and that's almost to where we are right now. That's at, we'll put this chart in to let our viewers see it, but that comes in at the 208 level, and we're at 217 now. So I would think somewhere around that 208 level it should have some pretty good support, because that would be the first major correction that we've had since we were going up in November in Tesla, when we went from 116 all the way up to 260. So I'm assuming that 208 would be some pretty good support in Tesla.
But today we reached a low of 210.27, just about 2 points above the 208. So this one, I was just thinking whether we have reached that temporary bottom for a time being.
Well, it is certainly good. I don't know how close I can get on a $200 stock. We're talking about about 1%. That's about as close as I can come with the prices. So that's what I would be watching, is to see if it'll do that, if it gets that 2 level. If you're short, I would put. And I know you mentioned to me before that you were doing some selling on this thing, and I would certainly lower your stop down so that you don't lose anything. But there's still the potential. We have a very wide-ranging bar so far today, and if it closes badly, below 208, and this could easily go down to 167 without any trouble at all, William.
Okay, got it. And the second stock is Apple. And, I've been looking for the downward move for the Apple, but seems that today it has actually, done a little gap up. Could I say that, the Apple, the downward move, is it still intact?
It certainly looks that way to me, William. We have been in a down move in Apple for a great deal of time here. Ever since November, it's been a weaker than market stock. Just the fact that it's up today is some type of news, I would imagine. But just give me 1 second to update the chart because I want to make sure that I have all the data in here that it's supposed to be in here. Yeah, we're in good shape here. I will put this in. I still think we're looking at $460 a share in Apple. All we're doing now is we went up and looked at last week's high a little bit, and but to me, it's got a beautiful ABCD down there at around $465 a share, and so I would think that that's what our price objective would be.
Okay, I got it. Thank you very much, Mr. Pesavento.
Thank you for calling in, my friend, and you have a wonderful day in that the City of the Lions. I think that's a beautiful place where you live. Okay, thank you, William.
Thank you. Bye.
You bet. Okay, folks, we're going to take a quick look here at the gold market because we're getting down to some key. Well, let's do silver first because silver, I think, is giving some really good patterns as far as time and price that we like to look at. And we use that in conjunction, with timing in the gold market. We don't trade silver too much, but we do trade gold quite a bit, and gold did make the 786 retracement. But the silver has really got a really nice pattern coming in here. If you'll notice, I posted into Tiger TV, we have a beautiful ABCD pattern coming in on the 31st. That's a week from today. And that's where time and price would be equal. In other words, the move from the AB leg would be equal to the move of the CD leg in time, and it would also be moving there in price. And that's a week down. That's a week from where we are right now. So we'd be looking somewhere around $19.50 per ounce in silver, which is about another 50 cents from where we are at the present time. So I think we're going to be down for the rest of the week in both gold and silver. Gold hit the exact 786 retracement that we were looking at, for quite a few weeks there. And let's just put that in there. Let the folks take a look at it. If you'll give me 1 second to pull this up, we will have it in here, and you'll see that, we don't have it as well as I wanted. So just give me 1 second. Yeah, we're okay here. Just give me a second, and we'll be just fine here. And that's what we want. Okay, this is what we want. We have we made the 786 retracement of this big move from August down to the January lows where we had that squaring of price and time down there at the 1180 level. We rallied $200 an ounce, and now we're correcting. We've already corrected. We're almost. In fact, we just made the 382 retracement today of that whole move from December, right at the end of the year, on December 30th, to the high we made just 2 weeks ago. We've already made the 382. Okay, we got the Dow down about 60. NASDAQ down a little bit also.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. So we've got a caller from Wisconsin. Chris, are you there?
Yes.
What can I do for you?
About a month, 6 weeks ago, you were bearish, and you were looking at some SPY 180 puts expire in April.
That's correct.
What's your thought now? You still hold those, or did you dump them?
Oh no! I mean, I bought them with the whole expectation that if I would lose the whole premium. But I've got a month to go. But we also, when we made the high back on the 3rd of March, we actually did some futures because we had some tremendous divergence. If you follow the newsletter at all, we were making a higher high in the NASDAQ, which was not confirmed by anything else. And so that was telling us that something was really amiss. And so we started to look at the short side of the NASDAQ, which has worked well for us. But I'm still holding those through April. And I think they still have a legitimate chance of. They're not very far out of the money, so just a couple of bad days, you could be easily into the money on those. And the risk was very small, and that's why we were looking at it at that point.
Okay. Well, thank you.
Okay. The key to watch, Chris, is that if we take out the February lows, we've come down so quickly here. We've retraced almost 70% of that February move to the March 17th high, or the March 20th high, not March 20th, March 3rd high, and that tells us that we probably will, get more of that coming to the downside. That's what it looks like from the charts. But the key figure here, there are two things to watch. Is watch last Sunday's low on the S&P at 1821, and that's the key thing to look at. That would be the Dow at around 16,000, as I recall.
All right. Well, thank you.
All right, thanks for calling in. I appreciate it.
Have a great day.
You bet. You too. Okay, we've still got the Dow down about 50. It's been the strongest of all the indexes, with the S&P down about 11, which is still pretty good. And I posted the chart for the VIX index into the room, into the Tiger Den, and you can see that there's really no fear in the market at all here. We've come off of the 786 4 times over the past month, and it hasn't gone below that, and it's made a few higher bottoms, but there's no panic in the market at all, and it still seems that we're ready no one's really afraid yet. Once that thing starts to move, that'll really bring some fear into the market. And remember, we have all-time margin debt like never before. We broke all the records going back as far as they can look at them, and that goes back into the early 1900s. And so we have the largest number of bulls versus the number of bears, which is also big. But the patterns are the thing that we focus on the most, and those have completed some major patterns up here in the 1, 2, 3, 4, 5 expanding triangle. If you remember Treasury bonds going back 18 months ago when we were up in that 155 level, we were making the same types of patterns that we're looking at right here. So keep in mind that this is the type of patterns. They're very, very big. They're very, very powerful, and that's it. I've had a request to talk a little bit about the big date that's coming on April the 21st, 22nd. It's just such a big date, folks, that we've never seen a date astrologically in recorded history like this. Going back 10,000 years, which you can search very easily using the computer programs that we use. You can check to see if you've ever seen anything like this, and our data does not go back far enough, and that goes back thousands of years, to even see anything remotely like this date on April 21st, 22nd, which I believe is Easter weekend. And I don't know what's going to happen. All I know is it's going to be something really big, and it's going to be on the newspaper of every place in the whole world. It's going to be global. I did something like this in November of 1989. I said the same thing. In fact, I offered everybody a free subscription to my Astrocycles newsletter if that wasn't one of the biggest events of the decade in 1989. And the market did absolutely nothing, but it was that date, I believe it was November 9th of 1989, was the exact date of the fall of the Berlin Wall, which changed the economy of Europe. So it was the biggest event of 1989. And of course, if you didn't count the crash of 87, which is actually the best buying opportunity of that decade, was the crash day of the 19th and 20th. And we'll get another crash someday, but when it'll be and how it'll come, I'm not exactly sure, but nobody else is either. So we'll have to wait and see what happens. We're going to have something really big at that point. Going to take a little break here. We got the Dow down about 70, the NASDAQ down about 70 also.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we've had a request to take a look at the price of Amazon, probably one of the best-run companies in the world. And as you can see, we completed a bearish Gartley the other day when we rallied up on the 13th of March, and we've come down now. And as you can see, we're setting right at the 786 retracement of those lows from February 3rd. So if we go below those, you're going to be looking at some really serious corrections in some of these things. What's interesting here about the Gartley pattern that we had here in Amazon is you'll notice that it went right up into the gap area that it had on the end of January. We broke down from the $400 level all the way down to 336, and we left a huge gap there. We went in and filled that gap right at the 61% retracement at the 382 level. And since that time, we've sold off about 10% in just a matter of 7 days. So we're at a really critical level here in all of these things to see if it's doing. If we close really badly today, folks, and I'm talking, you know, the Dow down more than 150 and the NASDAQ down more than 100, that's going to tell me that this thing has started, and just be really careful. Like they used to say, you know, be afraid, be very afraid, because if we start breaking these things, on the downside, these old support points, and breaking them so quickly, it's telling me that these large patterns that we've been watching for weeks and weeks form might have finally kicked in, and that's telling us that we're going to be looking at something different this time. And believe me, folks, it will be different this time, but not the way that in which most people think. So just remember those lows of February 3rd. If you're in any 401ks or things like that, you want to be sure to protect yourself if it goes beyond some of those levels is what I would be watching here. But watch the move today, because if it cracks open, it could really be quite nasty. We have the same situation now. We're going to take a look at Google, because that's another stock that is incredibly. I mean, I don't know anybody that doesn't use Google. I mean, that's just that's mother God and country stuff, and we're almost at the 61% retracement. We're about $10 away in Google of making the 61% retracement of the January lows. That's from the whole year. So we've done this in a matter of just a few weeks. But what's interesting is that the acceleration that we've had in Google over the last 2 days is what's a little bit troubling, because the high that we made back on the 17th of March was a 61% retracement of the all-time high up around the 1230 level. And look how quickly we gave it all back. When these markets start to move down, the markets drop faster than they go up, and the reason for that is that fear is a greater emotion than greed. This is why Hollywood, does all these movies and stuff about, zombies or whatever, the other scary things that they have. It's hard to do a movie on greed, and because you don't see the same physical characteristics that you do when you have fear. So this is why the markets go down, faster than they go up. So keep in mind that we're looking at something here pretty significant in these markets because of the way they're coming down so quickly. That doesn't mean that we can't have good bounces from this level, and the VIX is telling us today that there's absolutely no fear in the market at all. And it's going to take the Dow down about 150 to 200 today, I would think, to make the thing move a little differently. The Dow has been the strongest of the indices over the past 5 or 6 days. That's due primarily to stocks like J.P. Morgan, and as you can see what we talked about in J.P. Morgan, that's making a massive, massive top up in here. That is really unbelievable. In fact, on the long-term weekly chart, J.P. Morgan is making a 1.27 expansion of the high from 2007 to the low in 2009. It's making a 1.27 expansion. In fact, it's doing it in the face of $19 billion in fines that they have to pay for things that they did wrong. They won't go to jail for these because it's just money related, but if you and I were to do something like this, we would be getting free room and board for a considerable length of time, in my opinion. That's what I would be thinking would be happening. So we'll just see what's going on. We've got some really interesting things happening in the currency markets. I'm going to do the euro first because it's got such a really nice pattern forming here, and I want to do the weekly chart so you can see what's happened recently here. If you'll give me 1 second. There we go. We should be all right here. We'll put this chart in just 1 second, and it's the weekly euro chart, and we are at a 61% retracement in the euro here on the downtrend. We've had lower highs from 2008, 2009, 2011, and again here in 2014, and we're setting at the 61% retracement of the high from 2011. So we're getting ready to have something pretty significant happening here in the U.S. dollar. The U.S. dollar index has made a massive bottom down at the 79 level, and as long as that 79 level holds, we'll be looking at something, much, much higher in the dollar index, which means the euro, because it's 53% of the dollar index, would go down a great deal to the downside. So a price objective on the euro would be somewhere about 10% lower than where we are right now, down around the 127, 126 level is what we're looking at in the euro. And if Putin takes over Europe like I think he's planning, we would probably be looking at a euro somewhere around 60. I'm saying that with tongue-in-cheek, but not necessarily total tongue-in-cheek, because the man is a KGB agent, ex-KBG agent, and so he certainly will not be. You can't take him at his word because they're trained to to not tell the truth. So that's the the bottom line of what we're watching here. So the key today, folks, the whole week is just to watch to see how the stocks react near these lows of March the 17th. That's at 1821 in the futures. The S&P, that's about 20 points from where we are right now. And if we do that in one day, you can turn the lights out there on Broad and Wall, because this market will not make a new high for quite a while, probably quite a while. These patterns are so big, folks. You got to respect them, and they haven't turned yet, but they're getting very close to. I've had a request to revisit the Bradley model, and frankly, I don't believe it's been working that great over the past few. Just 1 second, I've got to redo it because I have to refresh the data here for just a second, and then I'll be able to do this. And we have another question, but I'll take that in just a minute here. If you have any questions, it's 877-927-6648. Shucks. Okay. And give me 1 second to put the Bradley in here, and then I'll be ready to go. And let's just give me 1 second. All I have to do is overlay this, and I should be okay. Let's see if it's correct. Yeah, there we go. And then we'll just, Well, I'm having a little technical problem, so just bear with me here 1 second, and then we'll have this done in no time at all. There we go. Oh, that's not it yet either. There we go. That should do it. Okay, the main thing here, this is the Bradley model. You'll see is the green line, but we're looking at the Dow that did not take out the Bradley high on December the 31st. We made a 1.27 expansions in the S&P. We made a 1.27 expansion in the New York Stock Exchange Index. We made a 1.27 expansion in the NASDAQ, and this did not go higher. I mean, it's amazing that the Dow did not go higher all during that time, and now we're trading below the 786. So that's telling us that we're looking at something that looks like it's pretty ominous in here. Whether it's going to kick in today, tomorrow, or maybe never, but it's got the potential here, folks, to see if it's going to take a look at it. We really don't have any major Bradley dates until the 21st, and believe me, that date that we're looking at is far more than Bradley stuff. These are things that you just don't see it very often. It's called part of it is called a Grand Cross, where you have Jupiter and Saturn and Neptune and Mars all crisscrossing at 90-degree angles. I don't quite understand it astrologically, but all I know is from the energy points that I look at, and those are the day counts, this is a huge thing that's happening on the 21st or 22nd of April. I just don't know if it's market-related or not, but I do know that we have a Bradley date coming in at that time, and that should be something that would tell us that we're at a very, very critical level, in the market, to watch this. So we're making new lows now as we in here in the S&P, and we haven't quite done it. Yeah, we're doing it in the NASDAQ also. So we're starting to accelerate to the downside. But the key number is 1821 in the S&P. That's the main thing that we want to be watching. If we get below that low that we made on the 17th, that would tell us that we're getting ready to most probably accelerate to the downside. The key figure today in the Dow Jones, I believe, is somewhere down about 150 on the day, and we're only down 80, so we're only halfway there. But we have to start to accelerate if we're going to get to that point. That's the key figure that I'm watching right here. We made a little bit lower low since we've been on the air in gold. We came within $1 of the 382 retracement in gold at 1308. But again, I don't believe the gold and silver are going to bottom until March the 31st, because those are the time counts that we're looking at where the ABCD and everything is completing, at the right time. So that's pretty much what we're watching at that point. But the markets have definitely changed character a little bit. You notice when we rally early in the morning, we immediately give it all back, and that tells you that there's a lot of selling coming in, to the market to try to get out. And remember, the fear is a greater emotion than greed, and these markets come down faster than they go up, and this one went up very fast. So don't be surprised if something crazy happens. And, that's it. And what's amazing to me is the fact that, we got the Dow down almost 90 points and the VIX has hardly moved at all. So it's showing there's no fear in the market at this particular time. Whether that's going to continue this way or not, we'll need to wait and see, but that's what it's looking at right now. We've had a big move in some of these foreign markets. We're going to take a quick look here. We got a call from our friend in Philadelphia. John, are you there?
Larry, I just speak on behalf of all your listeners. We are all very grateful you've made a nice recovery to your procedures. So we welcome you back and thank you kindly.
Okay, my friend, what can I do for you?
Wanted to ask you if you could just share with us your thoughts about last week, Friday in particular, timing-wise. That high in the S&P came on Friday. That was the equinox date. Could you confirm or tell me if I'm wrong that was also a P index date, and what significance in your mind that has?
Well, you'll have to ask Steve Rhodes about the P index because I don't have that data in front of me at the time, John. All I know was the spring equinox, which is a big, big thing to look at astrological, because those were the equinoxes, and solstices were, etched in stones by the Babylonians in 8000 BC when they were talking about wheat crops. So I don't understand, the emphasis of the equinoxes or solstices, but I do watch them, especially when they come in on Bradley dates. I don't believe it was a P index date, but I'm not sure. I'll have to check with Steve Rhodes on that because I don't have my data up and running right now. I'm just trying to, finish the show here. But I will double check that to see if it's going to do that. But that's what it looks like to me, is that something significant happened at that time. I don't know how much, but I don't know if our listeners know this or not, but they better get ready to start experiencing higher prices in meat, because hogs and cattle have actually turned to the downside finally, but hogs are very, very close to what I think is a major top. We've had a tremendous move in pork here in the past 5 weeks. It's just been a flagpole straight up because of the virus, I guess, that's involved. But it's interesting that, they better get ready for that. We'll cover that on the commodity show someday and let the folks see that they're going to have to be ready to get, more prepared to buy, pay more for their meats and stuff.
Yes, indeed. Great. Listen, Larry, thanks so much. I appreciate the comment.
Thank you for calling in, John. I appreciate it very much. All right, folks, we're going to take a quick look here at one of the major markets. I've had a request to take a look at the Nikkei, and that's the Japanese stock market. And I'll put this chart in for us, and you'll see the. If you give me 1 second to. Wow. These little toggles that I have are so difficult for me because they're so sensitive that if you're not exactly where you have to be on your mouse, it doesn't give you a one. I have to delete this. There we go. I'm going to show you the Nikkei compared to the dollar yen, and it's basically showing that the dollar yen has made a major top, as has the Nikkei. And they're breaking down. They're almost taking out the lows of February already, and that's it. That February date is so powerful that it's amazing, that February 4th date. We'll take a little break, and then we'll be back. We got the Dow down about 80, the NASDAQ down also about 80.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, I'm back, and I've saved the best for last, I think. I've posted a chart of the notes, the 5 and 10-year notes that we use for U.S. government. And also it's overlaid over the 30-year Treasury bond. And as you can see, there's trouble in River City, folks. Interest rates are going higher. The Fed is, I think this is my opinion, I think they've lost control. I don't know if it's due to China or whatever it is. Something's happening in these markets that people are not really talking about it. And we've got interest rates going higher. And this is not what they're telling us, and so keep in mind here. These notes and bonds, I mean, I can tell you without any hesitation, they're at least 6 to 10 times bigger than the stock market. This is real money, folks. This is real money that people put into the markets. I know the stock markets is trillions and stuff, but this is big trillions. I mean, this is a lot of money here. And something is making big money be scared. And so I don't know where it's going to go, but it's going to be very interesting to see what happens at this particular time that we're looking at, because notes are far weaker than the bonds, which means the people that are they're scurrying to protect themselves in the note market. That's the way it looks like to me. So keep in mind to watch these bonds and notes, because if they start to weaken even more, that's going to be very difficult for stocks to do anything, I believe, on the upside, because of the fact of where we are on these long-term patterns and things like that. I wanted to mention, we've talked about this before, and that is the junk bond index that we watch, the ETF, and how it relates to the Treasury bonds. And we're seeing the same thing here, where people have just absolutely no fear in the market. They are buying junk bonds like they were the same rating as a 30-year Treasury bond, and that's just not the way the real world operates, folks. And if you can see the chart that I posted in here relating the relationship of Treasury bonds to Treasury notes, you'll see over the past the past year, since June of last year, the junk bonds have gained dramatically on the 30-year Treasury bonds. I mean, dramatically. They've had higher bottoms and higher tops during that time, whereas the Treasury bonds have lower tops and lower bottoms. Folks, I've been doing this for a long time. I haven't seen the charts this bearish in a very long time. I don't know what's going to happen to rectify all this, but something big is out there. I don't know what it is, but big money is scared. There's no question about it. They might tell you it's one thing, but what they're doing in the market is what they're actually doing, and their people are getting scared here. So I don't know what it's going to do, but we'll wait and see. Watch the VIX index. If it gets above 18, Basil, I believe that's Basil Chapman's number, I think 18.5 or something like that. That's going to tell us that we're going to start to see, and if we get above 20, you can forget it, because then it'll really take off. But right now, there's absolutely no fear in the market. We've got the Dow down about 80, and nothing really is happening. So my guess is just to wait and see if it starts to, fade badly on the close today. And but watch 1821 in the S&P futures. That's the real key to watch, in my opinion, and that would be the real testament. If we go below 1621 in the S&P, we're going to be looking at a real cascading market to the downside. We've already broken those levels in the IBB, the biotech index, but we still could hold and get a bounce from this level or not. So that's the things that I'm watching at the beginning of this week. We're starting to see a little bit more volatility, not a lot yet, but you're going to start seeing incredible volatility here between now and I believe, past the 21st of April for sure, but we should have increased volatility during that time. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.